Just taking you back across that breaking news, National Australia Bank first half net profit coming in at $2.5 billion. That's up 22%. Also, cash profit, which is the one we tend to watch when it comes to the banks, coming in at $2.9 billion. That's up about 3.1%. And you can see there a dividend of 93 cents as well. So they're the key numbers you're seeing on screen, the cash profit at 2.9 and the dividend at 93. We'll head over now to Evan Lucas from IG. Evan, don't mean to put you on the spot. I don't know if you've had a chance at all to listen to what I've been saying about National Australia Bank, but certainly coming in with a cash profit of $2.9 billion, up 3%, and a dividend of 93 cents. Do you have any reaction?
Yeah, I do. Having a listen to what you just said, if you have a look on the estimates there, that cash profit is actually slightly on the beat to the estimate as well. The 10 analysts that have been looked on Bloomberg had about $2.89 billion, so a very slight beat there. The interim dividend is also a slight beat, up 1 cent on estimates, which was about 92 cents. So a relatively good result. Did you manage to get a hold of the net interest margin? The estimate was that it was going to be the lowest out of the three reporting, and that would be around about 2.07.
I think it came in at about 2.03. Evan.
Okay, so that's quite a squeeze with regards to where analysts had expected. That's a very low amount considering what we saw from ANZ last week, which was 2.25, and we saw from Westpac this week at about 2.13. That's a very, very small margin. It means they've obviously been really, really cutting down on that loan book. It was one sector that I think you'll probably find they're trying to outperform their peers. They're trying to pick up that loan book quite heavily. It'll also be interesting to sort of see how the loan book over in the UK was going. There was expectations that it may actually be increasing. The loan losses over there could be actually worse than when first forecasted, considering there was obviously that triple dip recession fears over in the UK. So we'd need to sort of get a bit more data. But headline cash figure sounds reasonably good. The interim dividend sounds pretty good, but that net interest margin is very, very low considering where they were supposed to be at 2.07, and they've obviously squeezed themselves quite hard there.
Okay, interesting. Also, we should point out ANZ goes ex-div today, so don't panic when you see the share price come up on your screen. Let's move on to the China data, Evan. We'll get some inflation numbers out today, and we want to know if this is going to continue to support risk assets over there. What are you looking for in terms of these numbers?
Yeah, it's the third sort of part of the puzzle with regards to what's going on over in China. We saw the PMI data last week, the trade balance yesterday, and now the CPI data today. If the CPI comes underneath anything under 3.5, which is probably what it will, we will probably see a little bit more of a risk on idea. The 3.5 that I quote, that's the official figure that the government wants for the full year. It was 2.1 last month. Analysts are expecting 2.3. It'll just abate that whole tightening fear that a lot of analysts have with regards to China. There was possibilities of overheating towards the start of the year. What we saw yesterday from the trade balance was definitely a good beat. It really helped that risk trade, particularly here in Australia. We saw the material space really jump up on that data and drift all the way through the day on the way up. So a good CPI data will mean that we get a bit of a triangle picture there. The PMI data last week did reaffirm what we saw in the trade data last week. We saw a bit of a slide there to 50.7, but the new orders was the main catch. It was from 52.7 to 51.7. And if we have a look at the shipping exports, particularly to the US and Europe, they both fell away, which was expected to pick up. A lot of people are therefore questioning the data, but the dollar values were actually stronger. So hopefully today, a really good result with the CPI data. It will therefore mean the risk on trade can basically continue to switch on if we don't see any sort of tightening bias or come into the market with a high CPI print.
Okay, we also have some jobs data out here at home today. Evan, what are you looking for? I mean, in general, jobs market has been pretty strong recently. I think we're looking at the longest extended period of low unemployment since the 60s.
Yeah, and we would assume that we'll probably hold on again today. One thing to note, the economy has been a little bit soft, and it's probably getting back to what we saw with the RBA on Tuesday. They came out and almost basically said, look, we've made a mistake. We need to cut rates because things are still not taking up the slack,
Do you think there was an acknowledgement there of a mistake, Evan?
You're never going to get an acknowledgement from a Reserve Bank, but it's as much as you're going to get for an acknowledgement.
Reading between the lines, yeah.
Reading between the lines, and the big change in the language from the statement, you'd have to suggest that, yes, maybe we were a little bit too maybe too neutral, and it's definitely not hawkish, but too neutral for the last couple of months. We maybe sort of got it wrong from there. You're never going to get a say we've made a mistake.
No.
They've just changed their plan and said, look, we're going to go now rather than later. Let's get on with it. And because of that, I think you've got to also take into the idea that the ANZ job ads have also remained really, really flat. 11 out of the last 12 have been negative months. So we wouldn't expect the unemployment rate to change from 5.6. It's the median and also the mode estimate as well. But there is a possibility that that 11,000 change will come from mostly part-time jobs rather than full-time employment, and that's where we've really struggled in this country. The full-time employment has continued to sort of go backwards, and that's where we really need to drill down to in that employment change read, which is probably going to be the main one to watch today. That 11,000, it most likely will come from part-time rather than full-time positions.
Okay, that's important to watch that distinction. Evan, thank you so much for your time today and that instant analysis as well on the banks. We appreciate it.
Thanks, Kate.